Now, the G20 group extended its debt service suspension initiative to low-income countries until the end of the year and disclosed that this will be the final extension of the initiative. The announcement comes just as One.org called on the G20 leaders to put politics aside and support a robust economic response package for vulnerable countries. And I have One's Global Policy Executive Director, David McNair. He joins me now from Brussels for this discussion. Thank you so much for your time on the show today, David. Interesting times we're seeing. And I'd first like to get your take on that decision we saw yesterday from the G20.
The G20's move on debt relief yesterday was a step in the right direction, and we welcome that, but we need to be honest about the scale of the challenge ahead. The IMF estimates a financing gap of around 450 billion for low-income countries, and yesterday's move on debt covers about 2% of that. We're seeing that China, which owns about half of Africa's bilateral debt, is not participating meaningfully. Neither are private lenders, and that needs to change. But the G20 also signaled support for a new proposal at the IMF called special drawing rights, worth about 650 billion. And this is a big deal because it could, it's the scale of financing needed. The challenge is that when they are created, special drawing rights are assets that can be exchanged for dollars or pounds and can be used to fund healthcare and other countries' needs. But when they are created, most will go to rich countries, about 5% will go to Africa. So the next step is making sure that all of that money goes to where it's needed most. And our view is that that need is really the response and recovery to COVID in Africa and other low and middle income countries.
All right, but David, when you look at how things are playing out, though, what else needs to be done from the G20 in terms of the debt service suspension? Because we understand that this is going to be the final suspension they're going to do. And do we still need further tweaks on the DSSI?
Well, so the DSSI has provided some welcome relief, but it's really at quite a small scale, and that's because it only offers relief on bilateral debt. And as your listeners know, debt that Africa owes is increasingly owed to China and also to private lenders who aren't participating. So they need to be brought on board. But we also need more fundamental rethinking of the sustainability of debt in Africa and also the cost of lending on private markets, which is often just too high and is not commensurate with the risks that private lenders face. So we need to address those structural issues. But the immediate thing is getting financing to address the liquidity crisis. And that's where special drawing rights come in. This 650 billion proposal, if it's targeted at the poorest countries, could make a real difference.
All right, I hear you when you say that, but still on the special drawing rights, I would like to get what your ideal situation would be for the drawing rights. Yes, you've said that if it's targeted at the low-income countries, but what else could make it have better impact on the countries that need it the most?
Well, I think that a lot of African countries are facing a liquidity crisis. I mean, you saw last year Nigeria at one point spending 99% of its revenues on debt service. So we need to address, the debt issues. We need to address, the access to liquidity, to invest in health and education. But that needs to be done in a transparent way, so that there aren't issues of mismanagement or issues of corruption. But also it needs to be targeted at what will end the pandemic as fast as possible, which is investing in vaccines, investing in health services, but then building back better and investing in the kinds of things like green energy that will transition and create jobs for the future.
All right, but David, let's look internally now. When you look at Africa's external debt, we see that it's been rising, for quite a while now, for over a decade now. And so it raises questions around debt sustainability. Don't you think some countries are nearing that level of debt distress?
Well, there are. I mean, the IMF does an assessment, and there are increasing numbers of countries in Africa that are in or at risk of debt distress. And for those countries, we need to look at productive investments. We also need to look at ways in which that debt can be restructured in a fair way, which treats all of the creditors fairly, but also means that our austerity programs aren't put in place that then undermine the COVID recovery. What we've seen is a real double standard during this pandemic, where rich countries, G20 countries, can print trillions, close to 18% of their GDP in stimulus packages, whereas poorer countries don't have access to that. They've, their stimulus packages have been closer to 2% of GDP. And we need that double standard addressed, and we need the G20 to step up urgently, because the longer we wait, the more countries will default, the more crises we will have to deal with, and the more expensive it will be.
All right, David, but still looking internally though, how else can we address it in terms of policy recommendations, looking at how countries, especially sub-Saharan African economies, can better address this policy-wise?
Well, I think the first thing is, getting, strong public financial management systems in place, and making sure that they're clear guidelines, and there's transparency around the budgets and how the money and revenues are spent. Civil society participation and parliamentary participation, and that is really important. And one of the things that we have been pushing is that whenever loans are made to governments, particularly from private entities, that they need to be made in a transparent way, so that parliaments and civil society activists and journalists can scrutinize them. But ultimately, what we're seeing is a liquidity crisis caused by a global pandemic that's affecting everyone. But the ability of African countries to respond is just not the same as G20 countries, and we need the IMF, the World Bank, and G20 leaders to step up with much more liquidity urgently.
But you think it's too early for the G20 to make that call on this being the final extension for the initiative, bearing in mind that we're having resurgence of the virus play up in different parts of the world?
Yeah, I think what you're seeing now is a real inequality, not just in the economic fallout, but also in the rollout of vaccines, where the US, the UK, other European countries are vaccinating rapidly, whereas some African countries may have to wait until 2022, 2023 to reach herd immunity. And until that happens, economies won't be able to open up. So I think it's far too early to make that call. We need to kind of keep all options open and make sure that we're monitoring the risks and investing now, because crises on health, on education, and so on will be much more expensive to deal with. And part of the argument that we've been making, in Brussels and Washington and other capitals of G20 countries is this isn't just about charity. This is about the smartest way to end the pandemic, because if you're vaccinating, all of your people at home in rich countries, but the virus is still raging in other countries, it has the risk of mutating and coming back in ways which are resistant to the virus. And we could be right back to lockdowns all over the place. So this is both a smart strategy from an economic perspective and from the perspective of ending the pandemic, aside from being the right thing to do.